everyone, welcome back to my channel. In today's video, I'm going to discuss the potential effects the election could have on the market. I'm going to talk to you guys about how the market condition is currently and how it could react to the different scenarios come election day and then post-election as well. Now, full disclaimer, these are not my political views. I am not endorsing one candidate over the other. I'm merely stating my personal opinion based on research that I've done and what I've seen in the current market condition as well. So over the past couple of months, I want to say from August until now, we've seen a lot of market volatility. This comes with the fact that every day there's some type of breaking news regarding economic conditions, global conditions, as well as pandemic news. With the cases consistently rising and phase 2 fears, there has been a lot of fear and stress in the market. Market sentiment has been really hard to gauge, and us as traders, if we're not able to gauge the market sentiment, we're not able to really determine if the market's going to go up or if it's going to go down. After the CARES Act officially expired on July 31st and funding was halted to American citizens, we've seen a lot of anxiety and fear in the market. Investors are not sure where the economy is going to head. On top of that, they're awaiting election results to see if a new administration is coming in, or are we going to depend on the current administration to fund that stimulus? On top of the stimulus news, there's been ongoing news in regards to the COVID pandemic and the continuously increasing numbers, as well as the fears of a second wave coming through. This has pushed a lot of fear into the minds of investors. With no solid news on whether or not we'll have a vaccine by the end of the year, there's been a lot of growing anticipation and fear of another economic shutdown. Now, since 2008's presidential election, where we had a change in administration and the Obama administration was elected, up until March of this year, the VIX, or the Volatility Index, which measures the fear and stress in the market, was ranging from $15 to $20. The average closing price of the VIX was ranging between $15 and $20. Now, since the growing pandemic concerns started in March, the VIX has approached an all-time high of around $86 this year. It is on track to have an average closing price of around $30 by the end of 2020. Now, we haven't seen the VIX at these levels since the 2008 presidential election, where we had a change in administration. I do believe once the election is over and there's less anticipation in the market, we will start to see the VIX back down to normal levels. Now, historically speaking, we've seen that when a new administration is elected, the markets didn't perform as well as compared to an incumbent president being elected. They gained 1% less in the preceding year as compared to a president being reelected. The markets don't like uncertainty, and when a new administration comes in, there's a lot of unknowns that go into it that can potentially factor into market sentiment. Now, I do think we could potentially see a relief bounce post-election just because we'll have definite answers and less anticipation of the next presidency. However, I do think that you need to keep in mind who takes over the legislative branch as well as who takes over the executive branch. For example, if the Democrats take the presidency, we could see some tension on the stimulus front if the Senate remains Republican. Now, depending on the winner of this election, we could see some changes and market volatility on individual sectors, just dependent on the stances of each party. For example, healthcare. If we look at the years leading up to a presidential election, we've seen an increase in volatility in the healthcare sector. For example, if the Democrats were to win, we could anticipate a tougher stance on drug prices, which could in turn put pressure on pharmaceutical and biotechnology companies. Also, former Vice President Joe Biden wants to offer Americans a public health insurance option. These are all issues that could potentially weaken the healthcare sector and could be a buying opportunity in the future. Now, in the technology sector, if we were to see President Trump be reelected, we could see regulatory actions against big tech intensify. The DOJ has currently launched an antitrust action against Google and is looking to launch more against several of the other big technology companies, such as Facebook and Twitter. Now, I'm not saying that if the Democrats were to be elected, there would be no actions taken against big tech. However, their approach might be a little less strict as compared to the current administration. And then we have the trade front. Now, trade policy is not only affected by who the next president elected is, but also whether or not the Senate remains in Republican hands because Congress approves new trade deals. Now, under the Trump administration, we have seen a lot of trade concerns up until when the trade deal was confirmed with China. There was a lot of market volatility just due to the fact that we weren't sure if we were going to get a trade deal or not. Now, recently, we've also seen President Trump issue several executive orders against applications such as WeChat and TikTok as it pertains to national security. These are all issues that could potentially affect the trade deal and trade front with China. Now, we've seen that Trump's approach to the trade practices has been kind of a unilateral approach, whereas Biden has been much less outspoken in regard to China's trade practices. Now, regardless of everything I've gone through with you guys in this video, I want you to take away a couple key points. One, the markets historically tend to underperform in election years. Two, pay attention to what party takes over. For example, if one party takes both the executive and legislative branches, we could see significant market impact. Three, the COVID-19 pandemic has increased uncertainty this election, so it could potentially shift whatever historical market movement we've seen in prior elections. Also, pay attention to individual sectors as they can be affected by which party is elected. They could still potentially have increased volatility post-election. Also, guys, please take what you read in the news with a grain of salt. As traders, we need to have an unbiased opinion on the market. We need to be well informed and well aware of the news and what's going on, just so we know how it could potentially affect the market. However, you never know exactly how the market's going to react to a specific set of news. That being said, you need to approach the market with an unbiased opinion. Now, also make sure you guys are looking at the bigger picture and don't lose sight of the bigger picture, just because the market has been up and down with most presidents and administrations. However, the overall trajectory has been positive. Another thing that I want you guys to pay attention to is earnings for Q3. If you pay attention, you'll notice that a lot of companies have been either beating on earnings, or if they've been taking a loss, it's a lot less than what was estimated for them to take a loss at. That being said, usually earnings is one of my favorite times to trade because there's a lot of momentum, there's catalysts behind stocks, and you can catch really, really good moves. However, for quarter three, if you've noticed, earnings hasn't really had much of an impact on market sentiment. Overall, market sentiment is still low in anticipation for the next presidential election, as well as stimulus news and COVID-19 concerns. So you can really see how much of an impact all of these situations are having on the entire market. All right, so that's all I have for you guys in this video. If you have any questions, go ahead and comment down below. Also, make sure to like and subscribe to my channel, and I'll see you guys in the next video. Bye.